Welcome back to the NITE Economics YouTube channel, and today we're going to be looking at the price of gold. In terms of the titles for my YouTube videos are a little bit clickbaity, like I've said in one of my other videos. Just ignore that. They're usually going to be about the general topic, but they're a little bit on the clickbaity side. I understand that, so I hope you guys don't take that too personally. I hope not. So today, like I said, we're going to be looking at the price of gold. And I previously made a price analysis or several price analysis videos on gold and whether it had topped out. And I had said that in those videos that gold usually, that silver usually tops out first, goes and creates a lower high, and then gold goes on to create a higher high later on. Now I would say that has been negated. It actually didn't do that. Just to give you an example of what I'm talking about, you could see here this pattern right here of silver. So the green line here represents silver, the silver price. So you could see silver made an all-time high here, and then it pulled back and then created a lower high where gold continued to go onto a higher high, right? So, or an all-time high back then. So you could see gold topped out here, came down a little bit, then went on to continue to go to higher price levels where silver did not do that, right? Right now, gold didn't do that, right? So, and I'll show you more examples of this. This has happened several times. You could see here, so you could see here the price of silver, high, lower high, high, lower, high, a low, and a lower high. And you can see here with gold, a high, a low, and a higher high. There's lots of examples of this. If you look at the history of gold and silver together like this, here's another example of it, right? So silver creates a high here, low, lower high, a higher low, and then another lower high there. Where gold created a high here, a low, same high, then it came down, a higher low, and it's chopping around, higher high, higher low, higher high. Where it's acting differently than the price action of silver during this period, and this was in the 80s, late 80s. I think there's a couple more examples of this, significant examples. So you could see here another example here. Gold creates a high, a low, lower high, higher low, and then goes off eventually to create a higher high, low, and then another higher high here, where silver essentially pretty much went a high, low, lower high, lower low, lower high, lower low, higher high, and then it just kind of started chopping sideways before going up and higher into the future, right? So this pattern is a common pattern. Unfortunately, it didn't look like it played out this time, so I was wrong about that, and I'm happy to admit when I'm wrong. My YouTube videos are not meant to be gospel. It's oh man, I lost my price. There you go. It's not meant to be gospel, and if I'm wrong, I'm wrong. I'm not upset about it. It's okay. You can make mistakes. Price action. No one has a magic wand, and the whole idea of my videos is to get an idea of where we are in the long-term cycle of different assets. In this case, we're talking about gold. I also have a lot of interest in the macro environment and where we are as an economy as a whole. I think that it's starting to look more like our previous recession over here, right? Where you had a high, a low, a lower high. So now we're actually creating this low around here, right? So if you could see, at this time, so gold dumped about 20%, and it's pretty much what gold has dumped out now in our most previous price action. From the high to the low, it's been about 20%. So let me get rid of silver now. We don't need that anymore. Yeah, actually a lot more. So from high to low, it did almost 27%, and then it's retraced back some. So now it's about a 21% from the all-time high. So now if we go back to, could ignore that now. If we go back to this area, so like where are we? As you could see, I think that there's a big chance or we're likely entering a recession right now. If we are, where are we currently in that recession? I think we're in this area here where you create a high and then you're creating that first low before going off to creating a lower high later on. So it was about a 20, not quite the 20% drop from the high there, about 18%. But then I am expecting a very large bounce at some point, right? And actually, let's do a Fibonacci retracement to get an idea of where that bounce might fall. A little bit lower. Yeah, so like it got all the way to the spot 786 retracement level. That's pretty high. I would have thought it would have been closer to the 618, but whatever. I mean, from a closing basis, it was pretty much right in line with the 618. And then as a wick basis, it got all the way to the spot 786 before. So that's a classic bull trap right there. People get really bullish when it starts to retrace like that. So I'm expecting something like that to happen in gold in the next couple of months in the next couple of months, really. I mean, we're kind of making this low right now. I mean, it might go a little bit lower before it starts to chop around, eventually create this higher low, and then going lower from there. And then once it really bases out and gets to the ultimate low, sometime if we are in a recession, you can expect 34% drop off, maybe more. And then because I am still very bullish on gold overall into the end of this decade, right? So I am bullish into it until 2030, maybe even as late as 2035. I think gold isn't done from like a long-term macro perspective. I just think now it's mostly done for this year. Like all of the action that happened in gold was really last year and early this year, and now it's starting to cool off. I mean, if you look at other indicators, we look at the BBWP, it's still in really high, at a very high percentile, so it's going to want to cool off for a bit. Mind you, it's a big move to the downside will keep it nice and hot like this in these extreme reads, right? So I do expect it to cool down and essentially kind of be boring for a while and like not do anything. So I'm not saying that's not necessarily happening yet, but I do expect that to happen, in the next couple of months to years, before it just chops around for several years before going up to higher highs. So I think that's kind of where we're at right now. If gold does drop down to 30% from where it's at, it's kind of like in these previous highs more or less. And I think that would be an area of interest. I do think that right now probably is going to revisit. I think it will actually get a 30% retracement and start bouncing off these previous lows over here that were created in October of 2025. So I wouldn't be surprised if it revisits kind of that area. It's kind of right now like hanging around the previous highs here from October of 2025. So maybe it chops around there for a while, then goes a little bit lower, and then goes on to create the bull trap. So I could expect it to get up to 5,100 more or less, maybe a little bit higher, 5,400, that region between the spot 786 and the spot 618. If it's a weaker bounce, maybe it just gets up to the 50% retracement or less. But yeah, so I'm essentially now waiting for this low to be solidified before it starts to chop around for a bit and eventually rally to a lower high, and then we'll see what happens from there. But right now I'm kind of just waiting out to see what happens with gold here. I don't really see it going much lower than what it has. Let's take a look at the monthly actually. It could go a little bit lower. The monthly is still super hot in terms of the BBWP. Is still really in really extreme reads territory still. 24 day, the 24 hour. Yeah, so like you could, I was holding out for this. Like if gold managed to get back up above like pretty much like around this area, I would be like, okay, like it's not over. But I think for now it's not looking good. It's not looking good. This definitely looks like a reversal. Back to the monthly. Let's look at the 3-month. Yeah, this is an ugly candle right here. This is a very ugly candle. It's pretty much all the gains that were got all the gains that were got in this trimester. When gold was pregnant in this quarter, in this trimester, when gold was pregnant, all of the gains that it made essentially has retraced fully. So that's not good. Yeah, the 6 month also doesn't look very good either. So let's go back to the quarterly here and let's take a look at, yeah, this look better. This looks like, yeah, it doesn't look good. I mean, there's still 7 days to go. So, I mean, we got to see what happens on Monday and Tuesday, because Tuesday is the end of the month. We got to see what happens, but I mean, it's not looking good right now for gold. I mean, if you look at this rally, it was insane. I mean, it was only a matter of time before this thing actually started to pull back. I mean, it can't go on forever, right? And the BBWP is in pretty extreme reads right now, even for the quarterly here. But I mean, it didn't get this high. I mean, it could still, like, if it dumps off significantly more, it could still get super, super hot. Sorry, by hot I mean by it could go into more extreme reads than what it currently is. I mean, it hasn't been this high since the 80s. So that's the highest it's been since the 80s, the BBWP. Can it go higher? Maybe. Maybe it's possible, especially if we start some... And I think if it continues to go up, it's because it's going down, not because it's going up. So what kind of implications will that have for this chart, which is a chart that I follow very closely? And you know what? I don't think it's going to happen. I think this is going to get boring. I think what most likely is going to happen is something like this. It's going to start getting boring, start trending down slowly. I just don't see gold under the current macroeconomic environment that we're in. I don't see gold dumping off significantly from where it currently is. If we look at the S&P 500 priced in gold, is this the right one? Yeah, so like it didn't close. It's actually it bounced right off that. So it's funny. This is the first time I'm actually looking at this chart from a quarterly standpoint. I usually look at it from a monthly, and yeah, like I mean, it's if it closes the month above this, I mean, this is still a downtrend, generally speaking. It would have to get, I would say it would have to get above this point for it to no longer be in a downtrend, but in my opinion, this is still a downtrend. So we got to see where it closes, where it finishes this month. This month is going to be very interesting because it's a quarterly close. So we got to see where it closes, and then I'll revisit this chart. But this is not a bullish chart by any stretch of the imagination. It's still going down. So we got to see. And many times, as I have pointed out in some of my previous videos, is that a lot of the recessions happen when the S&P 500 breaks down to gold and it gets below this resistance level. Not all of them, of course. Now there has been a few cases, but you can see the vast majority of the recessions happen when gold is below that this crucial support resistance level here. Here's right on the brink, but you could see the vast majority of them. So we really got to keep an eye out on what's happening here with this, particularly this very, very, very interesting chart, and see what happens. Maybe we're kind of in this zone here, something similar like this was in the great financial crisis, you know. And I mean, this is a downtrend too. If you look at it from here, it's in a downtrend, right? So let's do a retracement, a Fibonacci retracement for this bad boy. Yeah, so it was a weak bounce, like it didn't even get up to the 618. So yeah, we gotta see where this thing is headed. Let's do a different retracement. Let's do, I forget what it's called when it's, anyway, let's just do the bearish retracement. Yeah, like, does it want to head down to the spot 786 maybe? I think that would be a realistic target, especially if the stock market continues to go down. I mean, right now it's just showing like its initial phase, or its initial pullback from being pretty much stuck at all-time highs for several months. The last quarter was pretty much the last 2 quarters, like it hit the all-time high, and then one quarter, the Q4, pretty much just lived there, and now Q1 it started to pull back. What was it, like pretty much like 2 weeks ago? It started to pull back, so we gotta see where this guy's headed. Let's turn on the. I mean, it's still above every major moving average. If you look at it at the quarterly, it doesn't look bad. It doesn't look bad at all. If you look at it at the monthly, it doesn't look so good. But even this doesn't look bad at all. So we gotta wait and see what happens with the stock market. Maybe the stock market, maybe it's not dead, like I had previously thought. But actually, I think we're kind of somewhere in this area here. You know, heading into a recession. I think it's likely where we're headed in the next year or two, maybe 3. But only time will tell. Let's not get ahead of ourselves. Once the S&P 500 starts closing quarterly candles below the 5 exponential moving average here on the quarterly, then things will get very, 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 very interesting. As of right now, this still looks okay, especially when we look at it from a quarterly standpoint. The bi-yearly also looks pretty good, although I don't think it's really going to go anywhere until it retests this 5 exponential moving average. It usually is very interesting. When price action gets far away from the 5 exponential moving average, which it has been away for, this will be the second quarter, unless it comes down to 6,141 before the end of this month. Oh, sorry, not before the end of this month, before the end of, in 3 months from now. It usually doesn't really do much, and it's not going to move up significantly to the upside until it retests this, or to the downside. So I think it's likely going to retest. Now that I look at this, I think it's going to retest this 5 exponential moving average here on the 6 month and the bi-yearly. I think this is likely to happen at this point, because you could see, right, like it doesn't do anything. Like look, it stalls out. It didn't really stall out there. It didn't touch, but it continued up for a bit. Then it stalled out. Then it came down, retested. Then it went up. Here you can see it didn't touch here. Stalled out, retested. Then it went up. Here it went up, and then the following month it retested. So you could see this pattern plays out quite regularly. You can see here it came up, didn't touch, and then the following month it reconnected with the following bi-yearly. It reconnected with the exponential moving average. So actually now that I look at it, I think it will retest that, or it'll get down to at least that 5 exponential moving average here on the bi-yearly. And it's a target that I've been looking at. If you look at we had a silver cross here. Sorry. We had a silver cross here a couple of days ago, or now it's like a couple of weeks ago. And when you have a silver cross, you usually have a reconnection here with the, white exponential moving average. So this is the 200 this is the 200 simple moving average. But now that we look at this bi-yearly, the 5 exponential moving average is pretty much where this guy's at. It's a little bit lower than this, like 6,100. So now I'm starting to think this is probably a realistic target, actually. And I mean, this downtrend it's below every major moving average that matters, right here on the daily. So yeah, so I think this is not bullish, right? So like, Now that I look at this more closely, sorry, not this one, my ratios. So now I'm starting to think this is just a quick bounce here. Is this the right one? Why does it look like this? I know, okay. Let me get rid of this. It's fine, you can leave that. Let me turn off this. So yeah, so you could see it's pretty much bounced some. It's starting to get rejected here at this previous high, but it's still not looking good. Ideally, you'd want to get back above this high around here, 1.95 more or less, and it's far from that. I think it has more downside than anything, but it's hard to tell from this chart. I mean, this is a downtrend for sure, but I guess the question is it reversing or is it heading lower? Right now, I'm saying I'm of thought of it's gonna head back down. But we gotta see what the S&P 500 does today. Yeah, it's like pretty much being rejected on the 5-day here on the 21 exponential moving average. Like this, the chart doesn't look good. 2 weeks, monthly. Whoops. Is this the right chart? Yeah, it has to be. I don't know why it looks so weird now. Oh, I know why. So yeah, let's turn back on. So yeah, so we gotta see what happens with this one. I mean, again, this doesn't look bullish, but we gotta see what happens with this one. Anyways, I think I'm starting to ramble on for too long now. Anyways, guys, if you're liking the content, like, subscribe, drop a comment, and I'll see you guys next time. Take care. Bye.